this week's currency update, it's been a choppy week in global foreign exchange markets, driven by central bank activity around the world. Early in the week, the yen continued to strengthen after disappointment from the BoJ last Friday, while the Bank of Japan did increase its equity exchange trade fund asset purchase program. Disappointment at the lack of further easing in interest rates saw the yen strengthen sharply on Monday towards 100. On Tuesday, the RBA cut rates by 25 basis points, as Westpac correctly forecast. The Aussie dollar briefly trading below 75 cents to a low of 74.91, but in trading in London and New York, it pushed above 76 cents and has spent much of the week around that level. And finally, the Bank of England announced a muscular package last night, 25 basis point cut in rates, a 60 billion increase in its gilt asset purchase program, 10 billion purchase of corporate bonds, and a term funding program that may reach 100 billion. Now, the Bank of England has maintained interest rates at 0.5% since March 2009, and its asset purchase program has been unchanged at 375 billion sterling since mid-2012. So a 25 basis point rate cut, a clear hint of another rate cut towards zero, and an increase in the total asset purchase program and term lending funding of £170 billion, clearly beat expectations, and the pound slid last night towards 131. And this heavy run of central bank action continues into Thursday next week with the RBNZ. The 25 basis point cut is widely expected. Westpac now expects this to be followed by another rate cut in November of this year, taking the OCR to 1.75%. So a very clear message is that central banks around the world are continuing to cut rates and increase their asset purchase programs. This favors higher yielding currencies, and I think this is one of the key reasons that the Australian dollar is performing well despite the RBA rate cut this week. The Aussie dollar has also received a boost from higher commodity prices. Iron ore has spent much of the week above $60 a tonne, and coal prices have outperformed as well. Coking coal, for instance, above $100 for the first time since April of last year. Strong Chinese demand for commodities including iron ore and coal, a softer tone to the US dollar, improved risk sentiment in global markets, and strong demand for high yield currencies including the Australian dollar have all been factors boosting the Australian dollar in foreign exchange markets, and I expect that to continue through next week. However, we do have a number of important risk events to maneuver through the next week. Tonight, we have the important US non-farm payroll report, and we've seen unusual volatility in that data in the last 2 or 3 months. And next week, from a domestic point of view, there's a number of key events. On Tuesday, we have NAB business conditions, and on Wednesday, Westpac consumer sentiment. Now, both should receive an improvement from the post-Brexit stability and global financial markets, reduced political uncertainty here, and also this week's rate cut. On Wednesday, Governor Stevens will present his final speech to the Anika Foundation here in Sydney. Governor Stevens has presented at each of the last 10 years at this event. This year's is likely to be extremely popular with traders and economists listening for any hints as to what monetary policy may look like under the new leadership of Phil Lowe when he takes over in September. Now, I expect the Australian dollar to remain strong in foreign exchange markets through next week, and the July highs of 76.76 to be challenged, and a possible move up towards the May highs of 78.35. These are all factors we can talk about in next week's currency update.